Welcome to the Insurance Producers Guild, delivering intelligence for independent agents to help you stay ahead of the trends shaping Medicare, ACA, life insurance, and the broader insurance market landscape. Let's get started.
If you ask any independent insurance agent what their biggest threat is right now, they will probably tell you it's a combination of three things.
Yeah, I hear it every single day in the field.
Right. They will say artificial intelligence is coming for their job, or that state regulators are making compliance impossible, or they think tighter Medicare Advantage economics will just, squeeze them completely out of the business.
Totally.
Yeah.
There's a very real fear out there right now. You can feel it if you're sitting at your kitchen table looking at your agency dashboard.
Absolutely. But that is the exact mission for this discussion, because when you ignore the headlines and actually look at the data, the reality is the exact opposite.
The exact opposite. Consumers actively want a human advisor. Carriers desperately need agents who retain clients. And regulators they're aggressively protecting the human-in-the-loop model.
It is a massive window of opportunity, not a threat. I have been in this business for over 25 years, and whenever there is a massive industry shift, the noise points to panic, but the data points to profit.
Yeah, the agents who position themselves right now as technology-enabled trusted advisors are going to own the next decade and monetize this shift today.
Exactly.
We have seen this firsthand, through PSM brokerage business coaching. We watch agents successfully lean into this exact strategy to grow their books.
So let us unpack the three forces shaping the next 2 to 5 years. We have the 2027 MA rate reset, the new state-level AI oversight, and the latest consumer data on what buyers actually want.
I love it. Let us start with the MA reset.
Right. So looking at the April 2026 CMS rate announcement, the headline numbers actually look fantastic.
They do.
We are looking at a net average increase of 2.48%. That equals over $13 billion in additional MA payments.
Right. And when you factor in the estimated risk score trend, that number jumps to 4.98%.
Yeah, which is roughly $26 billion, with an effective growth rate of 5.33%. Plus, the Part D risk adjustment is also being updated for the Inflation Reduction Act changes.
So it sounds like the carriers are getting this massive windfall.
It does. But there is always a stricter regime underneath the money. CMS is implementing much tighter discipline. For example, they are explicitly excluding diagnoses from audio-only encounters.
Wow.
Yeah, and they are also excluding diagnoses from unlinked chart review records, which causes a negative 1.78% impact right there.
That is huge.
And on top of that, CMS is sticking with the 2024 risk adjustment model.
So it is basically like a bank offering a higher interest rate on your savings account, but they send a strict building inspector to your house before you can withdraw the funds.
That is a perfect analogy. The money is there, but the scrutiny is intense. Carriers are facing massive audit pressure.
Right, meaning they will only reward clean enrollment and high retention.
Yeah.
They need sticky books of business.
Exactly. So what is the immediate application for the agent in the field?
Well, because carriers need perfectly documented sticky clients, the play is to preempt the AEP rush right now.
Okay, how do we do that?
Here's the play I would run. Do not wait for fall. Run mid-year policy reviews now so your book is documented and sticky before 2027 arrives.
Oh, that makes a lot of sense.
You sit down, you verify their doctors are in network, check their prescriptions, and document everything. It locks the back door.
But doing that manually for a large book of business is, physically impossible.
Totally. Which is why you have to utilize the PSM Marketing Hub. You use the platform to automate and send out these mid-year review invitations to your current Medicare and life clients.
Right. Let the technology do the heavy lifting.
Exactly.
Which actually brings us perfectly to the second major force, artificial intelligence. Because the moment you bring up AI, agents freeze up.
Oh, they panic. They assume state regulators are going to pull their license.
Right. But we have the March 2026 NAIC issue brief here. The National Association of Insurance Commissioners officially opposed federal preemption.
Meaning state regulators own the AI oversight.
Yes. And about 24 states have already adopted the model bulletin. Plus, there is a 12-state evaluation tool pilot running from January through September 2026.
I hear agents say this state-by-state stuff is a nightmare, but it is actually a gift.
How so?
Because the existing insurance laws apply to AI just like they apply to humans. The compliance perimeter has not moved an inch.
Right.
So now that the rules are clear, small but well-documented agencies can safely use AI to compete with massive call centers.
That levels the playing field completely. But let me ask you this. How do you handle a prospect who thinks they do not need an agent because they can just go online and use a generative AI chatbot to pick their plan?
I get that objection a lot. Consumers think it's a free shortcut.
Right.
Here is what I would say word for word. I tell them, I love that you are doing your research, but algorithms are not governed by fiduciary or suitability standards in the same way a licensed agent is.
Oh, that is good.
Yeah, I say when you work with me, you get governed advice tailored to your life, and it costs you nothing extra. A chatbot cannot advocate for you when a claim gets denied.
That is such a powerful pivot. You are moving the value away from just picking a plan to having a governed advocate.
Exactly. The contract, just paper, until a human forces the carrier to honor it.
And as a quick operational note on that, agents should definitely lean on the PSM compliance and legal department. They can ensure any new marketing tools you adopt meet these clear state guidelines.
Absolutely. So we have covered the tighter MA audits and the AI regulation. But what about the end consumer?
Yes, the 2026 LIMRA Insurance Barometer. This connects everything together. The U.S. life insurance industry is booming right now.
It really is.
New annualized premium topped $17.5 billion in 2025, and sales jumped 7%.
But the interesting part is what they are actually buying.
Right. The pattern from LIMRA is striking. Exactly half of consumers want policies that create retirement income.
Half want long-term care coverage.
Half want critical illness coverage, and half want emergency funds. Plus, they want customization based on life events.
So they're totally rejecting the old strictly death benefit approach.
Exactly. And the punchline from LIMRA is that consumers appreciate digital advances, but they yearn for human connection.
Yeah, they want technology to make the process faster, but they want the advisor to guide them.
The human advisor is the durable asset here.
And an informed buyer actually means a shorter close. They already know they have a problem. They just need you to validate the solution.
Which makes the agent a more valuable advisor. But since consumers want living benefits, you have to pivot your approach.
Well, you have to. If you sit down and just pull out a final expense rate sheet, you will lose the room.
Right.
Let me give you the script I use for a living benefits opener. It reframes life insurance from a death benefit to financial flexibility.
Let us hear it.
When we sit down, I say, most people think this is just a check for your family on your worst day. But the modern policies we are looking at are actually financial Swiss Army knives.
I love that phrase.
Thanks. I tell them, we can customize this to build retirement income, cover long-term care, or act as an emergency fund while you are still alive. Which of those is your biggest priority today?
Wow, asking them to choose their priority right out of the gate is incredibly strong. It assumes the sale and gets them dreaming about flexibility.
It changes your entire posture. You become an architect customizing a solution, not just someone pushing a commodity.
Well, this has been an incredible discussion. We started by dissolving the fear that independent agents are being squeezed out.
Right, the data proves it is the opposite.
Exactly. We saw that tighter CMS audits mean carriers need perfectly documented, sticky business from agents. We saw that state regulators placed a firm perimeter around AI so you can use it safely.
And LIMRA data proves consumers want humans to help them navigate these complex living benefits.
It all points to the independent agent being elevated, not replaced. So I want to leave you with a final provocative thought to mull over.
Go for it.
While the industry fixates on the speed of algorithms and the pressure of new MA rates, the ultimate competitive advantage over the next 5 years is simply the trust you build. Code can calculate risk, but it cannot sit across the kitchen table and provide peace of mind. Your humanity is your greatest business asset.
That's this episode of the Insurance Producers Guild. Stay tuned for the next episode. If you're not already with PSM Brokerage, this is the kind of actionable intelligence our agents get. Talk to us about contracting,